What's going on, guys? So today we are going to be really diving deep into what a scan should be all about. Now that you don't have to follow everything that I do with any sort of scan, right? It's not something that you have to follow along with, but I will have to say, I am a very simple guy. I'm a very simple trader. I don't really trade a ton of things. I really like to zone in on a few charts. And the reasoning as to why that is because typically within the market, what I typically like to think about within the market is, I'm always going to be that person that recommends being very good, very, 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 very good at a select basket, at a select small amount of a focus list, a small amount of tickers and ETFs on a focus list, or a particular rotation, um, or just industry by industry, stuff like that, right? And I'm primarily large caps. I'll trade at pretty much any large cap and mega cap. And that's basically all I really focus on, right? I focus a lot with like Spine, QQQ, and then basket wise, I'm primarily tech. If tech's not good, sometimes I'll switch over into energy and I'll focus a couple energy names and really zone in on like maybe at most two different sectors in a given week, right? Because I want to find the opportunity. I want to obviously take advantage of that opportunity, right? And then I really take advantage of great risk to reward on a few charts, and then I'm done for the week, right? And obviously, with different market environments, there's going to be a different approach for every single different week, right? Because there could be a lot of opportunity scattered across the market in several different areas, right? But whenever the market isn't necessarily in an environment where you're getting multi-day moves, then it's just something where I relax. I look at the very few charts that are providing very clean entries, very good risk to reward on the daily chart. So let's first dive deep into daily charts and weekly charts. So I just want to give a couple examples because there's no super defined criteria in terms of what a chart should look like, right? There's every single chart's always going to look different. We always just have to really consider the concepts, the volume, how constructive the trend is, retests of levels, failures of levels, distribution schematics, accumulation schematics, etc., 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 right? So there's always going to be a character and a vibe that the chart kind of gives off to you after you really implement these distribution and accumulation schematics in your head. Whenever you see outperformers and underperformers and loot and stocks that are, moving down, moving up, whatever it is, right? So for example, guys, whenever I go look at my scan and I take a look at things, and I was all over McDonald's, first of all, right? So whenever I, go to my little sectors watch list right over here, I take a look at my stuff and then I go over into this consumer discretionary, right? So I look at the sector fund. I don't always have to look at the sector fund, but then I break it down equity by equity and then I start kind of grouping these together within a basket, right? So if you think about this here, you have McDonald's, and McDonald's and Starbucks are, relatively similar companies, right? In comparison to like Tesla and Home Depot and Lowe's, right? You also have Nike, right? And a lot of these names sometimes will kind of group together, right? You have underperforming McDonald's from this whole entire cycle high at the beginning of 2024. You also have Nike that's been a major underperformer with this, um, with its all-time high being all the way back in 2021, right? You have a lot of these underperforming names. Another one being Starbucks, right? We have a all-time high all the way back in 2021 as well, right? So whenever you're looking at these things and then you start to see, okay, yeah, we marked down hard on earnings and we got this really nice recovery type of trade, staircase higher, higher low by higher low by higher low, and then they pushed it lower. There was no seller as they kind of pushed this lower throughout this whole entire sell side move, and then obviously we get this like stake announced from someone that has a stake in the company, and then it starts popping and giving off that accumulation vibe with this double bottom, the sweep of this swing low over here, um, a, a massive markdown on the name itself, right? And then obviously we mark up on earnings once again, giving another yet accumulation type of vibe to it. So that's just all I really need to know whenever I'm looking at this chart. And I'm like, okay, this is really beaten down. It's probably at COVID 2020 levels, if I had to guess. Here's COVID 2020 levels. So it's kind of within the 2020 COVID levels, not quite, but like the COVID recovery levels, I should say, right? If you look at like the weekly chart, it's a massive support. If you go over to McDonald's, really nice support right over here in McDonald's. If you go over to um, Nike, you have the COVID range, a really nice support on the weekly, with this being like that whole entire COVID trap that led to that massive squeeze and market rally, right? And then you start seeing these things where they kind of start aligning within the same general industry, right? You have a massive markdown. It's into this COVID gap, right? You always want to zoom left and see where price is really sitting at, why it's moving there, why the equity is marking down, right? Is it marking down to fill out spots on the chart that need to be kind of filled out for it to even move higher potentially, right? And that could all kind of stir up a whole new trade plan, a whole new trade idea if you really take the time to look into these things, right? So um, basically what I'm really trying to say here, guys, is that sometimes you'll see a small little theme emerge within the market. The theme here being a lot of these bottomed underperforming discretionary names that have been looking like really clean accumulations, and then you start just really studying the character of the chart and kind of understanding, like I said, accumulations through, exhaustion, accumulations through really nice volume hitting within the chart. That was the McDonald's one that caught more attention. This was more or less just like a really nice dead cat bounce after sellers made little to no progress on the lower lows. And then you also had Starbucks that had a really nice accumulative uh, type of pattern here where you're getting a double bottom. It already did recover kind of through that whole earnings gap, or at least above halfway mark through it. Okay, so I'm just basking small groups of names together, and then I'm obviously then zoning that down into like one or two charts that I could put on my focus list. So with that being said, what I kind of also look for would be sectors kind of correlating with other sectors spontaneously. So if you guys don't know yet, whenever the tech market, for example, is in an aggressive liquidation, you're going to have that cash rotate somewhere within the market, right? Those are massive companies. That is a massive amount of money that is being liquidated, right? And whenever there is a increase in fear in the tech market, that fear then typically will transition into something that's a little bit more risk off, right? Um, with that being said, it's pretty much going to be like a consumer. It depends on obviously what charts look really nice. You could also kind of dive into like um, energy at times. Energy at times is really, really, really nice. We caught this whole entire XLE rotation that began in the beginning of March that led into the beginning of April. And that whole entire window, guys, if you go over into like what QQQ is doing, beginning of March was kind of that phase of distribution that was happening. So whenever you start to see these distribution phases starting to play out, then you could start leading into thinking to yourself, okay, yeah, this is building some sort of flat top resistance, and a seller is kind of diminishing off of this. There's no strong red day here. There's no strong sell candle here. What it more and less is just eliminating supply simultaneously while it looks like QQQ is in distribution. And then from there, that's whenever we could start transitioning our focus into entering swings with energy, right? Um, that's an example of sectors kind of aligning. Whenever you have war talks, you could also kind of get the industrials to start moving. So this was right over here was like the beginning of March. I can't remember if there was war talk at the beginning of March, but if you go over to the sectors, some other defensive names that I do like to trade would be something like RTX would be a good one, especially if there's like war talks and stuff like that. You look right over here. This was kind of around that time. And then you get into March and you see a really nice rotation that continues for since the bottom of October in 2023, which is also, I think, war headlines were kind of emerging, right? So these are just simple sectors that are, like I said, correlating with one another. You could also kind of go into like the consumer staples. I actually was here not too long ago, right? And then when you're looking at this stuff, you see it take a swing low on earnings and then remark itself back up on that same trading day on really heavy volume, followed by a really nice low volume bull flag right into a reclaim of the support that was lost, faked out on, reclaimed, low volume flag right back into it. Beautiful area to start thinking about looking for some calls. And then you just take it higher low by higher low and constructive structure, right? You have to understand baskets of equities that kind of go hand in hand. And you also need to understand the character of that equity, right? You got to really understand, guys, that not a lot of short squeezes kind of happen within like consumers and stuff like that. That's very rare to see. There is going to be a lot of consolidation, hence the volatility that you buy on call and put options within a consumer name are very fair for a reason, right? They're not offering you cheaper premium and you got to think of ATR, guys. You got to think of the average volatility of the stock, right? So you have to take it with constructive higher lows. You have to take it with retests. You have to take it with fills of gaps. But if you stay patient and you really zone in on a chart, you could nail an entry here. You could catch it up into this gap. You could sell on July 18th. You could look at this pullback. You could start thinking about, re-entering calls on a daily higher low after they fill this gap right down here, and then you could start taking it now up into this gap. Whatever it really is, guys, it's it's a rotation that will last for weeks on end, right? Whenever you find a daily distribution happening within tech, whenever you find some of these names where, okay, you get a really nice looking candle on July 11th within Pepsi, an underperforming consumer, July 11th. And one thing that I like to talk about with underperforming type of, they don't necessarily care about what they're accumulating based off of like fundamentals, earnings, nothing like that, right? It's more and less just where does a really nice trade align whenever there is whenever you have this simultaneous type of liquidation type of look within tech. Where is the value at within another sector, right? Where is the easier trade at, right? And that's why I didn't really bother with Costco. It's been kind of on this outperforming type of run amongst all the other consumers. So I transitioned to I don't really mess with Walmart either. I transitioned to myself into the trades that, like I said, were a little bit more underperforming, right? You had KO, personally not as clean for me because it's just this massive level up here. You had PG. This chart really isn't clean to me, but like when I look at Pepsi, it really does start to stand out a little bit more. There's no true such thing as a really clean, like daily/weekly consumer chart. MO was another really, really, really beautiful one right over here on June 18th. So then you just go over into, like I said, QQQ. You could go over into like your semiconductors, stuff like that. You have a really ugly look within the midst of July. That actually started at the end of June over here, right, where we're likely going to be marking down for a small window on NVIDIA, right? So you could think about going short with NVIDIA, and then whenever you understand this distribution that is starting to really, really play out on July 24th, that's whenever, like I said, you could start transitioning in on July 24th into gathering a little bit more of a focus list in some names defensive wise that are catching a bid that with that are basically just reacting to this ugly chart, right? So, like I said, I mean, this was kind of all starting and really showing off red flags from July 16th up into like July 24th. And here's your really, really nice candle on July 11th. Here's July 16th right here, which is a really beautiful bull flag type of look, probably on the hourly chart. Here's another entry right over here on July 24th. Like I said, you go over into July 24th. This is that candle on July 24th within QQQ. So I'm sure you guys can definitely get a small idea for what I'm talking about. It's not always going to be just, oh, let's blindly buy any sort of consumer. You have to use an edge in terms of what's the best looking chart, what has the best looking risk to reward, right? I always like to target gaps or resistances or um, old supports, now potentially resistances or relative equal highs, right? So whenever the charts kind of display those as targets on an underperforming consumer like Pepsi, then that's whenever I could start really concluding that that's the chart where I want to be at within the whole entire consumer sector, right? And then obviously you could choose a few others if you really do like them. Like I said, the whole entire tech distribution was really showing off some red flags, in my opinion, like right over here, July 23rd. And then once we lost this level right over here, and this like gap level, that's whenever I started to say, okay, yeah, this is going to mark down probably a lot lower. July 24th, July 25th, July 26th, the whole window of end of July, right? Um, that's another reason I was long McDonald's, right? It's not necessarily the most defensive of defensive, but it's a really clean looking chart. It's been building an accumulation for quite some time. There's already value to this thing, right? I mean, whenever toots are desperately liquidating their tech positions, and then they take a look at this thing, that's a quick nice little 11% flip on shares there within 5 trading days. That is fantastic returns, right? That's what the ultimate goal is. You need to find those trades like that whenever the market um, looks a little bit riskier. Um, you also had, like I said, we already kind of went over all of these. You could go to the sectors list again. Potentially something like ZOM, as you could see, it was building out like really clean daily higher lows. There's so many things to pick, guys, is basically what I'm trying to say. And you really have to really limit this down into a few tickers that give an actual edge based off of structure. Like I said, McDonald's volume patterns were absolutely beautiful right off of the October 2023 swing low, I believe. Yep. You go right over to ZOM. You could start looking at like, okay, yeah, daily structure kind of building out here, filling the previous sector rotation gap. And then you obviously take a look at the fill there, followed by higher low. What would we be looking for here? Probably an internal based higher low and structure development for this to go then test up into this range up here, right? For a double top or looking for the unfilled bear gap up there, right? Which I could still have this as a focus for, especially if tech sells this week. So you still need to get the confirmation on tech selling at times, right? Because we did already get the dip. We did already fill some bull gaps. So, for example, leading into this new week, I'm not going to be like, oh, I'm going to front run energy catching a bid here and I'm going to go take a look at the daily on QQQ and see this little bear gap here. And I know the bear gap's going to automatically reject and it's going to get an automatic rotation into ZOM to go fill that unfilled bear gap on ZOM. No, you don't want to do that either, right? Um, one, because the correction did already happen. You need to be in the midst of executing these things as that correction is happening, not thinking about it after the fact of it being all said and done and now just kind of going for retests within these bear gaps. You want to be within the midst of where the more where the rotation is with more intention, right? You don't want to be, chasing McDonald's fills anymore. I've told you guys and warned you guys for weeks on end about McDonald's. Same with Nike. Um, so yeah, this is a time where okay, if you're not short the indexes, if you're not short tech, if you're not short any clean distribution schematic within something like NVIDIA, AMD, QQQ, then that's whenever you should just basically transition to a sympathy play based off of rotation that is happening out of the tech market into a new sector. It's very simple stuff, guys. It's just you have to be very reactive. You have to be also relatively patient. You have to find an edge within a defensive chart or a quote unquote safe haven chart, right? You don't want to be front running anything. Um, like I said, got to have an edge, got to have a risk level that's very clean. You have to have a 3-4 R type of trade. I don't really treat these trades any differently. There's no automatic type of, oh, I'm taking this trade and I'm I don't care. Like it still has to be treated like any other trade would be treated. So not a lot of people have strict enough criteria, and that's why they sometimes get toasted. They try to time this bottom here whenever the charts look absolutely disgusting. Um, you have gaps down here. You're up at 480. You break through a previous higher low. You fill a bear gap and then a bull gap, and you start to lose it actually, right? And then you get a really disgusting daily hot lower high with gaps all the way down 10% lower. Okay. Um, why would you even try to time the bottom here, right? This is August 1st. Go over to McDonald's on August 1st. This is McDonald's on August 1st. I can't even see that though. This is McDonald's on August 1st. All right, and QQQ on August 1st wasn't even the ugliest range. It wasn't clean looking here. It wasn't clean looking anywhere. It wasn't even clean looking over here, or honestly, not even over here. All right, and that was July 23rd. That should have already been hinting to you that there's some red flags, right? Then you start transitioning into these names, and you're like, oh, okay, yeah, this makes a lot of sense. Yeah, the risk on market's kind of over for the time being. Yeah, here's August 1st on IWM, right? Then this starts to distribute, right? What do you think this does? Because sentiment over here was so bullish, guys. They all just got supply dumped on their head August 1st into August 2nd into August 5th, right? With the distribution actually starting what it looks like to be on this day right over here, this July 27th. Okay. It basically filled this little bear gap, and it didn't fill it the whole way, but this is the little gap over here. Doesn't have to fill it the whole way either, especially whenever it's this old back in 2021. But filled a decent portion of that and then started to reject. Boom. Supply dumped right on their brain August 1st. Go over to August 1st. This is whenever we started to get the preliminary type of accumulation happening on semis August 1st, right? And now this is the new rotation and a really beautiful relief trade. Meanwhile, you're getting IWM looking like shit now, right? So you could kind of see how moves happen in one way that then transition into them affecting, not directly affecting, but you guys probably should be getting the picture by now. So, yep, that's basically what I scanned for. So, for example, for this week, what would I be looking for? I haven't hit my full scan yet, so bear with me here. I'm kind of doing this on the fly. But when you're looking at things that are underperforming, when you're looking at individual tickers that look relatively clean, whenever you're looking at some names where, okay, you have McDonald's breaking out of this resistance, it's a really nice, clean daily chart. I would keep my eye here. It's not going to be a full focus. What I'm more and less looking for would be a reaction, first of all, to this whole entire bear gap, a reaction to the fill of this gap all the way up here that started the initial distribution. I would be really telling myself fills up here on NVIDIA are not very good leading into this 126.36 level. They're not good at all, actually. And then I'd be looking at the chart that has a little bit better of a fill whenever you go take a look at like the daily. The daily being a simple retest of the reaccumulation that happened from May to June, right? Which was a really, really, really nice trade that I took on. It was on Thursday. Yeah. So potentially what I would be looking at would be something like this gap right over here. Are they going to claim the gap again, hold it as a support, and then move this thing higher for a retest back into resistance up towards 231? Are they going to put in some sort of like daily lower high, right? Something that looks like this, right? So something like this would be what I'm looking at, right? As far as like a tech name that I would potentially think about filling long on, I would like this thing to hold like 207.67 or into like 209.55, right? So I'd be very interested in a pullback, see if they hold it, potentially go long. And right then and there, guys, I can already tell you what it's going to set up, right? You go long here, stop beneath like this low, or long here, stop beneath like an intraday hammer or whatever it might be, with like a target all the way up into here. You're looking at like a 6R trade, right? These are the type of trades and the type of criteria that we always want to be taking. So I'm always mapping out the execution level. I'm always mapping out what I would expect for the chart to kind of play out with, and then I'm always mapping out what the risk to reward under that trade would be, and then I'm also kind of mapping out like, okay, what can this chart really do for me here? Like I don't think Nvidia can really do much for me here because it's not providing any sort of edge. I don't think it's really providing any sort of re-entry. There's no super clean execution levels to really be playing off of here. Um, Tesla has a lot cleaner of like an execution range to be trading off of. And then you kind of that's an example of like a one ticker I would throw on my watch list for the week, right? You also have, something like AVGO. This is not as good of risk to reward. However, we have a gap all the way up at 169.38. This is an inside bar leading into the week's close. Whenever you look at like the previous day low, which would be Friday's low, it's holding this gap from right over here. Okay, so when you're going into like the 15 or like the hourly, that's when you could start saying, okay, what could this trade potentially bring us? I mean, this is a trade where I would like to see the buyer a little bit earlier and then be long here, stop beneath that low, target into the gap, right? That's a much better risk to reward type of trade. That is a 3.5R minimum, I would say, with decent execution. So yeah, I mean, you always just want to be the whole entire point of what I'm trying to say here, guys, is you always want to be mapping out the risk to reward. You always want to be mapping out clean execution levels and what your risk would be off that execution level so you know how much drawdown you will see based off of what expiration you trade, right? You should also kind of know that. Um, so yeah, I mean, there ain't really much more to it, guys. I'm also going to be watching, okay, QQQs within this gap. I could start transitioning into like uh, tr some other type of sectors, right? You go take a look at some other sectors. Okay, you have like ZOM, for example, really ugly looking daily chart, so I'm going to be giving this one some time. But we did just get a leg up um, from last week, right? From last week, from Monday into Tuesday, Wednesday, Thursday, and Friday, we got the leg up, and then we actually consolidated all week this week at a triple top range, with this being a massive, massive, massive level, right? So if we were to get a really nice, strong, clean, clear looking rotation, the target could be much higher than what this would be right over here, right? This holds relevancy because gaps typically do fill, but that doesn't mean it has to be my target, and that doesn't mean the rejection and the reversal is exactly going to happen there, right? I just think it's a realistic target. So, when you're looking at something like this and say the market kind of transitions into risk off again, and you get a break of base and a go, you could start thinking about like, okay, this is my risk to reward on this one right over here, like a 4R trade, right? This one doesn't have the best by no means type of fills. It's more of like a breakout trade. You could start looking at like, I don't know, some underperforming type of energy. Um, this is CVX and a massive big time support with a weekly hammer. So yeah, this isn't anything to do with my scan. I'm just talking about kind of how to break things down, how to really limit your focus into like a couple sectors with like a ticker from each. So yeah, with that being said, everything that's basically how I go about my scan. It's very simple yet effective, right? Simplicity is actually very key, guys. You don't want to have too much focus in too many things because, like I said, you always want to be, in my opinion, in trading, very, very, very good, very, very, very good at a few things rather than like decent slash mediocre at like a bunch of things. Right? So, yeah.